Good morning, Wall Street Reporter. Senior editor Andrew Packer here, back again with another one of our fascinating interviews looking at some of the big trends shaping, in this case, not just the year ahead, but possibly even the decade or a few decades ahead. That's because while we're kind of looking at what's going on in the market day to day, there are a lot of powerful trends that are playing out over a period of years. If you're the kind of person who's wondering, hey, I missed out on this big move in, say, Tesla Motors, and I didn't get in early on electric vehicles, what should I be looking at? Where 10 years from now, I'm going to look back and think this was a great place to invest. Well, look no further. Today we have joining us Bronwyn Williams, a futurist and trend analyst. Thanks for joining us.
Thank you so much for inviting me.
Yeah, so let's just kind of start with kind of that 30,000 view, the elevator pitch from, kind of pre-pandemic times. What exactly kind of at its core are you doing as a futurist? What does that entail?
Yeah, so the way I like to describe my work is I generally work with private sector clients, but sometimes we do engage with public sector actors too. What we really hired to be is to be that sort of contemporary equivalent of a watchman standing on a watchtower in a medieval fortress, if you can sort of imagine that. So our job is to sort of scan the horizon to spot the marauding hordes before they get too close to the various citadels that we are employed to protect. And that really means that we are able to just sort of buy time for our clients. As we have seen with things like the pandemic, just having a little bit of a head start, a little bit of forewarning, a plan in your bottom drawer to what to happen or what should you do in any of the eventualities of the things that are not impossible, but could be very, very disruptive for your industry, can make the difference between having a rather successful year and a rather depressing one.
Okay, so you're thinking like, hey, there's a 1% chance this event will happen. If it happens, here's the game plan. Here's how you can protect yourself from losing this amount that you would lose if you don't plan for it. So
yeah, that's exactly what foresight is. So foresight helps us to do a couple of things. It helps us to firstly to spot threats, like I spoke about, but also to spot opportunities. In both of those cases, being a first mover is a huge advantage over there. But also what we try and do is to then actually shape the future. So we like to say that futurists don't really predict the future. In fact, if we're predicting it perfectly, we're probably not doing a very good job because we're not enabling the people that we engage with to actually action those opportunities and those threats that we have pulled out from them. Ironically, though, my training is in economics, and economists tend to try and predict the future all the time. So
yeah, I mean, that's my background. Like, you want to build a model, and the assumption is people are rational and the world is stable, and there's all these chaotic things that can happen to completely change that. And just the way people behave when your stocks are up a lot versus when they're down a lot, can have a kind of a huge influence, and it can almost be a self-fulfilling prophecy. So how do you counteract something like that?
Oh, absolutely. I mean, narrative does drive markets. I think we know this. We know this intuitively as individuals, but sometimes it's missing on some of the more formal models that are directing our policy and that global leaders or corporate leaders are using to base their decisions on. So you have to understand that things aren't set in stone. We can only really deal with probabilities, not with what is definitely going to happen in the future, but we can scope that space. We can say, what are the limits of possibility on both bad and good borders of possibility? And then more importantly, sort of what is it that we actually want? And then what's within our own personal frame of ability to change? And what are external factors that we will have to deal with? We don't have influence over changing, but we do have influence over how we respond to them. So those are all the different sort of questions that we look at. In order to do that, what we do on a day-to-day basis is we try and track trends and see what the most probable sort of futures are likely to be. And then we try to play within that space to nudge the future for our various different clients, or at least nudge our clients towards a future that's going to be more beneficial to them.
I mean, let's talk about some of those trends, because I remember just thinking like, hey, if I could go back in time 10 years and just say, here are two trends to my younger self, not even give specific stock picks, it would have had, just a tremendous impact. And I remember looking at companies like Tesla and kind of playing them around earnings, or like Netflix, just these huge, massive, well-performing companies. How do you identify trends like that these companies are going to benefit from?
Well, I can give you a very good example. This year, last time in January for 2020, my sort of keynote presentation for the year that I did at a trend conference that I speak at most years here in South Africa, the big trend that I picked out for that audience was the fact that reality is decoupling from the financial and virtual sector. And I think we've seen that accelerate hugely, because when I spoke about that, the biggest tech stocks on the US stock exchange were not accounting for a quarter of the stock market valuation like they are doing right now. So we saw this huge decoupling, and as I like to say, like as in the world we live in right now, when it comes to markets, all the points are made up and the rules don't really matter. So we're living in this sort of borrowed time. But it was something that we have to sort of work with, because you can't work against irrational market moves. You have to work with it. As they say, the market can remain irrational a lot longer than you can remain solvent. And I think we've seen that this week with what's gone on with some of those hedge funds that have perhaps tried to bet against the market, or to try and play in a sort of real space when the world is moving in due to very different motivating factors. So I think that trend has played out. But now what I'd be saying for this year is that trend has to pull back at some point in time if we're looking macro. Because we're talking about those very, very big tech stocks that play in the virtual space. What pretty much all of them have in common is that they are platform-based businesses. In other words, they are market makers, but they're not actually traders in goods and services. And the thing with these sorts of platform businesses is they can only grow and scale as long as the buyers and sellers that are trading on those platforms or in those virtual bazaars are growing along with them. So at some point, those virtual stocks, when they become too big for the weight of the service that they are actually providing, will have to look elsewhere for growth. And we're starting to see that happening. So I think that the last year has perhaps been too exciting for those platforms. They understood that scale does become a problem, and that looking further ahead over the next sort of 5 to 10 to even 20 years, we have to have a pullback between that virtualized, financialized economy and the real world, because only one of those two economies requires the other one for survival. We're starting to see shoots coming up there. So, I mean, like, I'm sure you've heard the news and people getting all outraged about how much farmland, say, Bill Gates has been buying up, or Amazon's investments in both actual internet infrastructure and in farming land. So I think it's quite interesting if we're seeing these very virtualized companies starting to recall and come back sort of literally down to earth. And I think that's where the opportunities for real growth are going to be, because of course all the froth we can have on our exciting virtualized, financialized markets, at some point there does have to be some sort of pullback if we're looking at real opportunity on the sort of mid to longer term. Of course, in the short term, things can remain quite crazy for quite some time, particularly when we've got almost unlimited amounts of money being pumped into the system. We are going to see some very, very strange short-term effects as to the winners and losers. So it's very noisy out there at the moment.
Yeah, I mean, it seems, the saying we have here in the US is don't fight the Fed. Obviously, they're throwing a lot of money at it. And you still have hedge funds who are trying to kind of short companies on valuation. And now you really have individual investors going in and essentially crowdsourcing and engineering kind of the short squeeze, which before you would need kind of another hedge fund or another billionaire on the other side of that trade. Seeing this, especially with like GameStop this week, it's a brick and mortar retail store. When it was knocked down to $5 and people thought it was going to zero, sure, there was some value there, but it's got up to 300. Like
it's completely crazy. We have to just deal with it. This is the reality that we're working with, because markets are not just based on fundamental value. They're also based, actually, when you actually look at it from a really macro perspective, markets tend to be based on irrational human valuations. And in fact, my prior incarnation, before I got into the trends and futures space, is I did work in marketing for financial services companies. And what you learn very, very quickly is that the only real margin comes from irrationality. So whether that margin is based on a brand value or based on a brand love or based on an irrational need or want for status or for power or for fear or greed, any of those emotional levers that we can pull as marketers, as businesses, as companies. So I think it's quite interesting that when we come to sort of valuing markets and predicting where things are going, we have to be thinking about human beings as being the source of real value and real movements that affect the real bank balances that we have, even if on paper the fundamentals don't make sense to technical analysts.
Right. And I mean, eventually there's going to be sort of a reversal of those kinds of trends, and some of the people who have been, kind of enjoying it now are, hopefully going to avoid the worst of it. But there's always that one person who just sees that trend. And I feel like a lot of this occurs in finance, where you just extrapolate what's been going on and you sort of project that out to infinity.
Oh, exactly. Past
And then
performance is no indication of future performance at all, especially not in the marketplace we're living in. But I hope that earlier point that I made with the fact that that's sort of virtual value and that sort of fake value that's really just noise and volatility in the marketplace can only stretch so far before it has to come back to the real world, because at some point we are still tethered to that. But that tethering can become quite tenuous, particularly, as I said, when you've got the points on the scoreboard changing, because in mid-game, which is what we can really speak about when you've got sort of changes in money supply going on, to make the whole game unstable. But at some point, we have to have that pullback. The question, of course, is how long things can remain irrational and how irrational things can go before they spring back. But of course, the more crazy and the more untethered from reality things get, the harder the pullback is going to be ultimately. So it's a very interesting place to be right now, between the difference between sort of bulls and bears. And it's like you can try and bet against where the market is moving and where the energy is. But even if you sensibly right, it's not going to help you make money in the short term if that faith, that momentum, and that narrative is enough to carry us through a few more months. And I think that we are not quite there yet. I think there's still some air left in the machine, so to speak, that can carry this crazy time further forward than many of us might be comfortable to admit.
Right. I mean, what's going on now with some of these smaller stocks being driven by retail traders feels, before sort of like a sign of a top. And, with so much money kind of being thrown at the system, maybe we've got a ways to go, and a lot of other things can kind of keep getting added to the craziness before we start to settle down and kind of get that correction pullback, however you want to call that.
I think a great analogy there is that whole concept of faith can move a mountain, right? And we think of it as being a sort of like a biblical type parable, but it's not that at all. Faith is incredibly powerful because faith is based on the stories and narratives that we tell each other that are able to drive real movements and real value in the real world. So the question we've really got to be asking each other is how much we trust each other, and what are the stories that are going to carry through? What are the primary storytelling narratives that are going to be driving 2021 compared to 2020? And I'm seeing rather different sort of tracks in terms of those narratives. So on one hand, you've actually still got quite a lot of optimism in the system, and that's the indicator you want to be watching right now to see how people are optimistic about things that are not based in reality. And there's many reasons for that on a sort of psychological level. As our lives have become more virtualized, as we've been forced to find value in virtual interactions, we start to place more and more of our trust in them. And then, of course, you can't deny the sort of what the effect that the sentiment or unsentiment that things like the Bitcoin price has had on reinforcing this sort of belief in where things are going. We've got to remember that when it comes to belief in narratives, which do tend to move markets, they self-fulfilling prophecies, and they also have sort of feedback cascades. So like a belief sort of snowballs until it gets a lot bigger before you start to get the reverse trend going on. And I suppose particularly now in the United States, which tends to lead even our markets. I mean, our market's so small, we're not leading anyone over here in South Africa. When you've got the sort of optimism of the new presidency and the White House and all the rest of it, we've probably got some, as I said, air left in that sail, that we mustn't think that things are going to come back down to reality very quickly. And I speak about that from a sort of market perspective, but also from a social perspective. I think that we've been living in sort of borrowed liminal time over the last 2 years where nothing seems quite real and nothing seems, the rules, all the rules that we've had for our societies, for our markets, our economies are really up in the air. And I think that many economists will be trying to predict the future are going to be caught up short. And I've already seen this. I mean, if you sort of follow sort of on Twitter and all the rest of it, the old men screaming at the skies is quite an amusing genre right now, because there's no way to fight against the sort of nihilism that's going on in the marketplace right now.
Well, I mean, even if 2 years ago you said, hey, there's going to be this pandemic, there's going to be these global shutdowns, people would have probably said, no, you're like overreacting, you're ridiculous, this is not going to happen. Unless it's this sort of like world ending, like at the start of like a zombie movie kind of thing. But, we also didn't have that scenario either. So we're not really getting that extreme low, but we are in a position where policy wise, there can be a lot of structural changes coming in the next, 5-10 years that people aren't necessarily thinking about.
Well, exactly. It's amazing how quickly things go from being impossible to live without. And I think we've seen so many fundamental changes to the rules of our marketplaces. It becomes too complicated to predict very far into the future. We have to just understand that the rules are going to remain undefined for some time, which means we're going to see very strange winners and losers, like we've seen with the sort of pump and dump sort of schemes that are going on at the moment, because the new rules are creating new loopholes. Before we find any sort of new equilibrium, more strange things are going to happen. And just some of those really big fundamental changes that we can see is not just the helicopter money that's been dropped, not just the sort of loosening of like this, the Fed restrictions and the concepts of, debts and deficits don't matter anymore. We've also got things like debt jubilees on the cards, which means that people are looking for yield outside of the debt sides of the market, because how do you have any sort of trust in a financial system when, debt can be cancelled further down the line? So that trust sort of further creates more strange dynamics in the marketplace. That means people are behaving in ways that doesn't have any precedent. So we have to expect unexpected investor behavior, always bearing in mind, of course, people tend to act in their own interests. Now, the big one to watch is what's happening in the crypto space, because we're seeing great examples of Gresham's law of, the bad money chasing the good money out of the system. And it's creating huge inequalities and huge inefficiencies in what's going on in the marketplace, but that trend's not going to stop. And we're going to see sort of countervailing effects there, where governments across the world are looking at ways to sort of plug those leaks, because you can't run any sort of social contract when you've got some people that are playing different rules in a different game. Some people playing with international private money while your systems are funded by domestic, national, monopoly money. It's a very different system. So how those two systems interact, we just don't know yet, but we do know that governments are trying a lot harder to plug those leaks. So we're seeing things like the rises of your central bank digital currencies, for example, which are going to fundamentally shift the way money is moved around the globe and where the sort of balances of powers are over there. But we're also seeing, which is probably my biggest trend for this year, is taxes, all the creative taxes. So we see new ways to sort of paper over these various different leaks, because fiscal and monetary policy works based on economic principles that have been set out by one set of rules. Now we've got different set of rules. You can't afford to have people that are able to sort of exit the board and not play within that space. And I mean, just the threat of unrealized capital gains tax is quite extraordinary, or a work from home tax. So we're going to see more and more of those weird incentives, and how they actually end up changing dynamics on the ground is fascinating to work, because it is such a complex system that is being messed around with, and not just in one aspect, it's being messed around with in so many ways. It's like trying to predict the weather, which we just simply still cannot do with any sort of degree of reliability, even a few days in advance.
Yeah, exactly. And I mean, I live where we get hurricanes, and they've got some pretty good forecasting now and models, but there's just such these like days of uncertainty that have to narrow, and you have to just sort of sit there and wait and kind of wait till the better and more, recent data comes out. So that absolutely makes sense. I definitely see kind of the value of crypto, especially, Bitcoin, which was designed to sort of be this anti-deflationary kind of currency. When the government's, oh no, we're in trouble, let's just print more money. And let's have an asset where you can't do that, but we also have just kind of this other technology behind it that's decentralized, and it has this kind of ledger behind it, and it can move money more efficiently than kind of the existing banking system. It's amazing that in the United States we still have like the SWIFT banking, and it takes 3 days for like a check to clear. Like, it's the 21st century, and there's all these new technologies, but we're still in many ways kind of playing catch up with where the government's involved versus where people have just started kind of experimenting with their own new ideas and new things.
That's absolutely true. I think crypto is particularly interesting because it's a viable opportunity for people to opt out of economics as we know it. So this is hugely exciting if you have a corrupt totalitarian government, so you don't trust the value of the money that is being monopolized by your state. And there's many, logical reasons why people would want to escape into these sort of DIY tax havens, is another way to sort of put it. But how destabilizing is it for the social contract that is propped up by the general exchange of like we all contribute and then we all get stuff in exchange, when you're effectively creating a way for people to be, say, libertarian with their own money, but socialist with everyone else's? How stable is that? Because then the incentives in play don't really allow us to predict anything other than that sort of behavior. If there is a way for you to receive your helicopter money payment and to get your social security benefits without actually having to contribute back into that, of course you're going to want to do that, and most people would. But how can we have, stable societies and stable sort of fiscuses at a national level when you've got this sort of opt-in for the first time sort of taxation system? And I think that's very different whether you're looking at it from sort of a developing world with a totalitarian government versus a democratic country that's supposed to have like a stable financial system. Like in theory, the United States is. I think the incentives in play perhaps are less strong to opt out of that sort of system where you are than where I am. But definitely looking at where I live in South Africa and how we've already created parallel gated physical communities where you've got like whole essentially private towns where you've got your own shopping malls, your own schools that are all sort of cut off from greater society and patrolled by armed guards. You've now kind of got the digital equivalence of that. You're able to sort of opt out of participating in the macro economy of your country. And this becomes a sort of also a feedback cycle, also a sort of a cascade that happens as you are able to not have to use on-ramps and off-ramps. Because of course, any on-ramps and off-ramps into and out of a crypto, international private crypto money and back into your national currency can be taxed and tolled and monitored by your government agencies to make sure that everyone is participating in the same system. However, if you're able to earn money, spend money, and get your basic goods and services without ever exiting back into fiat currency, we start to find much faster sort of destructions of the underlying basis of the social contract. And we can only expect that that's going to have some very interesting moves on the real world stock markets too. Firstly, it's going to have a direct impact on inequality, which is already a growing trend right now. And it's also going to have an impact as to where people are sending their money to invest in the sorts of things that people are going to be sort of investing going into the future. I don't know if you have any questions in that regard, but I think that's a fascinating topic, the destabilization of the social contract that we're only just starting to understand right now.
Yeah, and that's pretty reminiscent. I was speaking with another guest a few weeks ago on that book, The Fourth Turning, just because, and it sort of looks more at the US structurally, but we're very much in this period where faith in our institutions is low. There will probably be some big changes in the next few years that will kind of help restore it. The last time we had that was World War II. It doesn't necessarily look like the pandemic is shaping out to be that exact catalyst, but if you look at the US the past few years with kind of the populist streak, people just are not happy with how things are run here. And part of that's our monetary system, which, Bitcoin is partially solving, but our politics is essentially logjammed, and it's supposed to be a deliberative process under the U.S. Constitution, but now you want to just have a Congress that's like, oh, hey, let's just vote to impeach a former president. We don't really have the authority to do that, but let's spend our time on that instead of, talking about getting people back to work or doing more, relief stimulus. That's like no one's talking about that in Congress anymore. And it's just all
governments are definitely bloated a little bit. That is the trend with democracies. Like mature democracies tend to over mature themselves either into stagnation or into some sort of form of totalism. But we haven't yet actually figured out how to avoid that, because democracy is still quite a new idea for society. But I think I can add some other sort of points as to what's going on there. So crypto is the one thing that's destabilizing our kind of macroeconomic spectrum. And then of course we've got the sort of the heterodox economic theories like your modern monetary theory and all the rest of it, which really just says throw the rule book out the window. So who knows? Anything could happen. Like at some point, possibly, we could run into hyperinflation or not. Like nobody actually knows. It's entirely speculative. But it's also fundamentally opposed to private money and cryptocurrencies, because modern monetary theory requires total monopoly and sovereignty over your currency. It cannot tolerate a private monetary system or any sort of crypto in that space, because it is essentially talking about an entirely managed economy from both the physical and the monetary side. If you're not able to sort of balance those books, that theory simply cannot work. So how those two sort of ideologies are going to sort of sit together is going to be also a huge bone of contention around sort of political and economic circles.
Right, and before cryptocurrencies, you had gold as a partial escape valve, and we had a monetary system that used to be based on gold. It got, kind of weaned out. The last tie between the U.S. dollar and gold actually broke around the same time Joe Biden was getting into politics. So, I mean, it's just kind of
so like that was almost like WTF 1978, right?
71, I think. Yeah, I mean, it's been essentially, kind of a generation or two since people have, really kind of, I think, thought about what's backing their money. And in this case, it's just sort of, well, maybe the government's going to print more and devalue it for you or not. I mean, I think a lot of people would have been a lot more concerned if we'd had some bigger fears of inflation, especially after the housing crisis. There was a little bit of fear, and then it didn't really materialize because we were still fighting deflation, because that's what happens when you have the collapse of a debt-based, kind of monetary system. Since most of our money creation happens with banks issuing loans. I think that's, one of those things where we could have a deflationary collapse just as easily as we could end up kind of overprinting, overstimulating, and get into hyperinflation.
Especially when you consider the fact that the dollar really is used to underwrite so much of global trade, and you don't actually have a choice as to stop printing money when other countries are hoarding that money. It's actually quite interesting parallel there to see what happened with the pump and dump stocks this week, where the Reddits sort of changed and manipulated the prices, and because essentially they were betting against short sellers. So you can kind of see like the debt and credit side there. And so what China's been doing, you would say their dollar reserves, so they're not spending, they're rather sort of taking out of circulation, because it kind of forces the United States to keep on printing money, to keep on balancing the capital and credit accounts. But at the same time, when you've got your sort of the reverse side of that deal is not playing the same game. I don't know if I'm explaining this very well, but essentially when sort of China's taking dollars and using it to buy hard assets instead of reusing those dollars to buy more American goods further down the line, you kind of get into what are they calling it, like the new Triffin dilemma, when it comes to the fact that you kind of stuck between a rock and a hard place. You have to keep playing that game. So there are like a global context at play here too. But what I'm really saying is that when you've got private money as an escape hatch, it makes the job of your policymakers and your regulators that much harder. Even taking aside the perverse incentives to sort of, game the system for populist reasons or for like less than wise monetary policy reasons, you have to also bear into keep those other factors in cognizance too. Which leads us to things like gold, like you were speaking about. In the past, if governments were facing these sorts of challenges with money supply and trying to battle the differences between deflation, inflation, all the rest of it, they had more physical control over that currency. Like, I mean, America did it. They came and confiscated gold from people. Like you can literally find someone's gold. You might have to dig a bit hard and it might be hard to do that, but it's a lot easier to block the on-ramps and off-ramps to a physical commodity that is affecting your bad versus good money equation than it is to do in a crypto space, because it's essentially impossible to regulate every on-ramp and off-ramp in that system, especially when people are using things like paper wallets. Is your government strong enough? Is your state strong enough is the question that people everywhere in the world should be asking, to actually prevent those flows. And the more the fiscal system, the more the government monopoly money system is manipulated, the more the temptation is for people to look for those loopholes, those exits. And going from, mainstream exchanges, which are quite easy to regulate between fiat and crypto, towards much more backdoor or dark web type places to trade, which are available, and they are very, very difficult to shut down. Once money is in those walled gardens, to get it back again is very, very difficult, and it just sort of compounds all the difficulties. And at the same time, when you've got people trying to protect what is theirs, and you've got sort of governments trying to deal with new rules of money printing and all the rest of it, you've also got a population that is more dependent on government funding than it has ever been before. There's more people that are dependent on government welfare, and it's growing every single day. So this is why you've got calls for things like universal basic income and all the rest of it, and why those calls are being championed by our Silicon Valley sort of, titans of digital industry, because they understand that you require consumers to buy your products at the end of the day. And they also understand that unstable society where you've got too many people that aren't participating in markets is not good for any business. So I think those three sort of factors are creating a uniquely 2021 trilemma between like universal basic income, modern monetary theory, and crypto. We've got a very unstable macroeconomic conditions that are busy brewing, because none of those are entirely compatible with each other. How are they going to fall out could be very interesting.
Right. I mean, it seems like there's a lot of potential landmines that, in some ways can be kind of good long-term if it happens and allows us to kind of positively restructure things, but, can also be a danger in a lot of other ways as well. I have an idea I want to run by you, because one of the trends I've been following the past few years is automation. And it's a powerful trend. It's not going away. Obviously can be terrible for anyone who needs to work for a living, which, is still, pretty much everyone who's not in the 1%. But if you're going to have something like, MMT, what if instead of that just being printed money, that was actually tied to some automation-based labor? Like, is that the kind of a solution that would make sense?
I suppose it could be. I don't know how sustainable it would be, once again, when you've got those on-ramps and off-ramps again, because then the temptation is, of course, that the owners of that capital obviously get huge and huger rewards that accrue to them. We've already seen this. This is perhaps the sort of the darker side of particularly people that are proponents of things like universal basic income. They tend to be people, as I said, like your Silicon Valley loves these sorts of ideas, because they understand that money will eventually come back to the owners of capital, which is very interesting, because the platform economy, as much as being sort of termed as the sharing economy, all these services, all these stocks have done so very, very well over the last few years, is also essentially a rentier economy, because it really means that we don't own stuff, but everything, all the real assets in the world are owned by fewer and fewer hands, if that makes sense, and everyone else sort of rents from them. So if you are one of the owners of scarce amounts of real stuff that people need, of course it's within your interest to promote things like universal basic income, because the real money ends up coming back to you. Everybody's got to spend their money to rent whatever it is they need from you at some point. So I think there's some sort of interesting incentives at play with people that are pushing those sorts of ideas. But I think there are also more interesting ideas than things like using, faking the money supply situation, or manipulating the balances in order to fund these sorts of things in very, very artificial ways. There's probably more sustainable ways to create more sustainable markets that are more inclusive to everyone. The catch again is to get people to participate, and having options to escape into walled gardens makes all these things much more difficult. And I'm quite interested at the moment about what I'm terming open basic income as opposed to universal basic income. So I've came up with that distinction because I think it's fundamentally different. A universal basic income is not opt-in, it is not opt-out. It is something that everyone participates in, whether it's through a negative income tax, whether it's through a handout. That by definition, you can't opt out of funding it and you can't opt out of receiving it. It's universal. It is applicable to everyone, whereas an open basic income is rather opt-in, opt-out, so it's open to anyone to join on both the funding and or on the recipient side. And there have been some interesting models that are coming out of that, because essentially they are funded not by force but by market incentives. Because with modern monetary theory or with universal basic income, what they have in common is that they have to be forced. They're forced programs that have to be enforced by a government. You have to force people to fund them. You have to force people to buy into them. You have to force people to work. I mean, like in modern monetary theory, the proponents are saying we have to have a jobs guarantee. They don't even want universal basic income. They say you have to work for your supper, and you have to work. Because if you don't work, we're going to have inflation. You have to increase your productivity. There's sort of a demand to participate, and it has to be enforced. Whereas the open basic systems that I've been looking at sort of draw from some of the more incentive-based, self-sustaining models around governance, around economics that have come out of the crypto field, in ways that essentially create almost like loyalty programs or private currencies that can be spent in the real world, but incentivize people for participating in. So an example there would be Circle's UBI. I don't like the way they've used universal basic income. I think they should be Circle's OBI, but I'll complain to their marketing department one day. And they've essentially set up a system where people can barter goods and services in this network using a private sort of token system in order to exchange that value. So it's going almost back to barter, but it's a way that anyone can participate, anyone can get credit in that system, but it's trust-based rather than sort of forcing you to put literal cash into the system. So it's very, very interesting. So if you do something, you've got credits within that network to gain goods and services from other people in the network. and it all stays in the network, and it's all technologically enabled, which is very interesting. We've never had technology that allowed us to do this sort of thing before. I encourage you to go look it up and read their white paper, because it's quite complicated, but I like these sort of self-perpetual motion type systems that don't require force, that rely on amoral actors all acting in their own best interests to create common good for the whole. So it obviously requires network effects. And then for another example of a different sort of open basic income that's actually been pushed in my country, in South Africa, which obviously has the world's highest inequality, we have problems, as I'm sure you all know. And in many ways, you can kind of see our very extensive and very long-running grants program as being perhaps, if you with enough sort of leeway or enough latitude, you could sort of see it as being one of the world's biggest universal basic income pilot programs. I mean, we've got so many people living off grants, it's unbelievable. And they're not exactly getting a huge living wage at the moment, but they're trying to change that. And there's very big calls in my country to increase the basic grants to more of a universal basic income level. So we're talking about like 10 times what people are getting now. The question is how to fund that. And what is being floated as an idea is that companies set up a private fund to fund this. And you might ask then, what is the incentive for companies to do so? But there's a very big incentive for companies to do so, because in South Africa, also due to inequality and due to our political history, we have what we call BBEE requirements, which means sort of broad-based economic empowerment requirements that mean that all companies are supposed to meet like a scorecard that makes sure they're empowering disadvantaged members of the community. It's a legal requirement. Every company has to participate in it. But the plan for sort of open basic income there would be that companies that contribute to this basic income fund would be able to use that to demonstrate ownership in their companies and to actually get their BBEE points out of that. So I think you've got affirmative action, which is quite similar. So instead of having to sort of box tick the number of people on your board, you could say these are our de facto shareholders that are all participating, being recipients of this sort of fund. And they've done the sums. It'll actually work out being cheaper for those companies to do that, to pay complete strangers a living wage than it will be to jump through the regulatory red tape. So very interesting to see how these sort of ideas can be used to exploit loopholes and to work with human nature rather than against it. Because it's a very real danger for any policymaker that they push too hard. Because if you push too hard in a world with escape hatches, with on-ramps and off-ramps into private money, you can scare away the capital, the real capital that you need in order to facilitate the redistribution that's required as a basis of the social contract in the Western world.
Right, and I think also there's a broader point here, which is just kind of continuing to do the status quo is not working for a lot of people. And it's going to probably continue to get worse rather than better. And just trying to find some different solutions, even if they're a little more radical, that kind of makes sense. I know here in the United States, there have been a couple of cities that have tried to address the chronic homeless problem by identifying, essentially sort of the people who have been there kind of in that system the longest, and then trying to make sure that they get the resources they need. Since most homeless people are actually it's actually kind of a short-term, it's fairly variable, but then there are just a very small percentage that's kind of a chronic issue. So addressing the chronic issue versus kind of the more transitory issue certainly seems to be a way to kind of change the way we are currently approaching systems, which is just sort of, here's sort of a blanket, some money if you meet these certain criteria. So there's definitely a lot of room, I think, for experimentation. It's just a question is, are we, going to be willing to do that?
Exactly. So I've been looking at one of the writing partners that I work with, so we look more at sort of geopolitical issues and how, 2020 is kind of like our generation's 1989. So 1989 was all about the rise of democracy, the rise of capitalism, the rise of free markets, the rise of open borders. It was globalism, democracy, and capitalism was on the rise. It was unstoppable. Communism had been defeated. This is the end of history. We had all those sorts of stories. But then 2008 happened, and you can kind of see that as kind of the peak of that sort of crazy capitalist plan. And what we've seen since then is kind of the worst of both worlds. So you've kind of got bailouts for banks and for businesses, but not for individuals. So you kind of got like corporate socialism, which is just fantastic, and you've got kind of fiscal socialism, So, but right. you don't have the socialism that people actually wanted. You don't have like healthcare in the United States, and you don't have actual security safety nets. So you kind of had the worst of both worlds, where you've got private interests being funded by public capital, so which is really it's the worst elements of both the sort of communist worldview and the capitalist worldview. I don't know those are very sort of broad, sweeping labels, but it does kind of get the point across. What we've seen since then is a decline in democracy. The number of nations that are actually accounted to be democratic by the Democracy Index that tracks these sorts of things on an annual basis. And we've seen, declining globalization, which is also interesting from a sort of investment opportunity perspective, how investment patterns and flows are probably going to be more regionalized and balkanized. And there's very interesting international strategic alliances going on there from a trade perspective and also from a sort of military perspective. And then you've also got this massive pushback against sort of like the neoliberal sort of version of capitalism, that we're going to have to figure out what comes next, because it's simply not working for us. And if I'm wearing my sort of futurist hat and looking a bit further into the future, I'm not even sure that nation states are equipped to deal with this. Nation states are also a modern invention. They're not something we've always had. And nation states are premised on a social contract. They're premised on a give and take. They're premised on sort of taxes as protection money belonging to a territory, to a geography. And how are we going to sort of defend those borders, both virtual and physical in sort of with the factors that we've been discussing today. So that's looking a bit further ahead to see what comes after the nation state, or can the nation state revive itself and develop a new sort of social contract that takes into account the excesses and the scarcities of the various macroeconomic models that have been tried and have not necessarily worked out for everyone. All we know for sure is that inequality worldwide has spiraled out of control since the 1970s. It doesn't seem to really be showing much sense in slowing down. Right. On intranational level. Of course, globally, that's petered out, but that's due to globalism. But if that's being pushed back, we're going to see those sort of inequalities growing too, which means, once again, we've got a lot of things up in the air because you change too many things at the same time. Trying to guess where all those cards is going to come down gets more and more difficult to see further into the future what happens. So we can only sort of look at where the cracks are, and then to sort of spot and to see when they're spreading, to see what's going to break next.
Right. And I mean, there's almost sort of, we're seeing these revolts, and part of that is what's going on in, financial markets, just, the power of messaging boards to take down hedge funds. I mean, that can be kind of a new thing, because for years, these guys called themselves the masters of the universe, earning 2 and 20 while underperforming the market. On average, most hedge funds, just have a terrible track record, and there's only a handful that actually do an exceptional job. And they're usually not the ones, shorting more than 100% of a stock's float. And, sometimes I think, these kind of issues can get in the way. But looking kind of beyond these geopolitical issues we've talked about, it just seems like technology is going to continue to improve. So, I mean, call me an optimist, but, that's where you kind of want to be as an investor. And you really can't be an investor if you're not an optimist, because, the alternative is sort of, go to cash, gold, Bitcoin, whatever, and just sort of, hide under the covers. But, we've seen some amazing trends kind of pop up within the last 5-10 years. What do you see kind of playing out as maybe some of the most obvious and maybe some of the less obvious trends for the 2020s?
Yeah, so I would say the intersection of tech and the real world, again, is where I would be looking. So when we sort of opened the conversation, I said, like, last year was probably the peak decoupling of reality from what was going on in the stock market. It has to come back, and it's coming back with a lot of money, with very deep pockets. So we need to be sort of tracking where the big virtualized money is going to be spending itself in order to get real yield, and that's going to be solving real problems. So it's the intersection of tech and biology, I think, is one very, very big one. So the whole anti-aging, prolonging life conversation is going to be massive. And it's going to be massive not just because we're able to do this now, because we have access to things like CRISPR technology, and even the vaccine technology that we're now seeing for the coronavirus is going to kickstart a whole wave of investment in that section. Biological investment and biological science has tended to lag behind the sort of physical sciences, but that's going to change. And it's going to change because of demographic reasons, because the richest populations in the world are getting older and they're scared of dying because they don't have God anymore, which is another trend. So we have to understand that the quest for immortality, for longer, healthier lives, is where a lot of cash is going. So there's lots of opportunities there. So whether you're looking in the pharmaceutical space, whether you're looking in the actual development space, or whether you're just following the big government money, because that whole concept of the development state, Mariana Mazzucato's whole idea of moonshots in the development state is taking off. Governments are also looking for places to grow, and the EU in particular is throwing a lot of money at these sorts of things. So there's a lot of big money that's drawing its attention to biotech sort of things, but particularly biotech with regard to extending life, I think is one area to look at. The other big thing to look at is tech versus food. So food security is still an issue, as much as we don't sort of feel it in the Western world or in the developed world. Food security is a growing challenge, particularly amongst just sort of growing populations in Africa, where a lot of the countries aren't necessarily that fertile and don't necessarily have the systems and abilities to feed what's going to be the world's biggest population by sort of 2050. So I think that's some very interesting places to look there. When we're looking at food security, in particular, we're looking at food security intersecting with sustainability. So there we're talking about things like alternative protein sources, like the lab-grown meats are going to be massive. I'm quite convinced that by the end of the century, maybe even by mid-century, just the concept of eating animals is going to be frowned upon as something completely, amoral or immoral that people should not be doing. It does seem to be the way that we are moving. So we can kind of see that's that trend away from depending on animal cruelty for food survival is only going to grow, and any alternatives in that space are worth looking at, as are any sort of ways to grow crops with less water, because obviously water is quite a big challenge. The next one will be water itself. So water security is a massive investment opportunity there. We've started to see the signposts. So at the agency I work with, Flex Trends, we've been kind of looking at this and how's water going to translate into the business sphere. And I think that the sort of bellwether that we've picked up over the last few months is the ability for us now to trade water futures. That really speaks to the fact that something is happening there. So any sort of investments in things like desalination solutions, like what Israel and Australia have been so good at and how to scale those things up, things like even rain, like geoengineering, another sector to look at massively. I don't know if you're familiar on a sort of geopolitical level that China's already been accused of stealing India's rain. It could lead to massive wars future down the line there. So if you want to look a bit broader, you can also look at perhaps some of your military investments, but not necessarily with the old powers, but more towards the sort of dragon, tiger, bear side of the world. We should be looking at what's going on there, but that's a bit of an aside. So I would definitely say biology, aging, food security, water security. Energy, I'm less bullish on at this point in time, because I think that a lot of our energy solutions are already in place. We already know what to do, although there is definitely space in the energy sector to look at what comes next. I think it's more a case of political will than new invention, if you're looking at those sort of like next big run-up stocks. So that would be my sort of overview. I don't know if you want anything else, but I think that's a start.
Yeah, I mean, those are all interesting points, and I feel like there have been enough kind of articles to kind of support those ideas. I feel like if Jeff Bezos could figure out how to live to 150 or 200 or even longer, even if it means cloning himself, like he's going to be willing to put the money into doing that. Some of these other multi-billionaires with tremendous amounts of wealth, similar thing. You mentioned earlier Bill Gates buying up farmland. I mean, I follow the trends of what billionaires kind of invest in, and they make all their money, and then a lot of them become huge landowners. Ted Turner put together CNN, and then at one point was the largest private landowner. But I mean, farmland in particular is certainly interesting. I think food, it's not necessarily production, at least in the US, as much as it's the supply chain. We kind of saw some of those disruptions at the start of the pandemic. They, I think, kind of got a little overhyped, but it could happen again, and something could cause it to happen where it becomes worse. And of course, water. Just recently started trading water futures. So that is, I think, definitely an area where you're also probably going to see a lot of speculation come in addition to just the fact that, it's a scarce resource that needs to be better managed. But, if we can improve technologically, and, you mentioned energy, obviously alternative energy prices are coming way down. I mean, I just got solar panels, the technology is kind of getting there where it makes sense. And if you could figure out a way to sort of lower the energy costs of desalination, you can, do a huge impact in terms of just creating a fresh water supply.
Because actually, all those things I spoke about, where you're talking about water security or food security, what they both are is energy challenges. With enough energy, you can solve all of those problems. The trick is to get energy at scale, and that's where I don't know if the political will is there to look into the nuclear space, because that's the quickest win to solve all of those other problems. But it's hugely contentious. So if you're going to go the sort of more renewable solar panels, wind, all the rest of it, it's going to take a lot longer to solve the security of those other fundamental needs that we have. So I'm very bullish on solving real problems, so food and water and the real basics, because I think that there's massive scope to just sort out that base layer. We talk about the future being here, but not evenly distributed. Come to Africa, we'll show you. There's a lot of catching up that has to be done. There's a lot of money to be made in solving those basic level problems before we worry about anything else. However, I'm going to contradict myself, because I think there's another opportunity is definitely worth exploring in the entirely virtual economy space. I'm terming it the metaverse, or metaverseonomics, as we want to sort of term it there. And here I'm talking about entirely fantasy economies, and it's a wide open space for pretty much any brand, any business, any entrepreneur to play in. I'm talking here about the sale and trading of virtual goods and services. So they say real estate, we're talking about that. They're not making any more of it, but that's not entirely true, because, you know, in the unreal estate space, you can start investing in the virtual real estate and actually trading these digital assets as real things. I think we're reaching a tipping point here for many reasons, sort of social reasons, because of lockdowns and people spending more time in gaming environments, in those sort of virtual parallel lives that they're building for themselves, and looking for ways to showcase status, because that always drives humans in a digital sphere, because no one's going to see on your shoes in a Zoom call or in like a call that we're doing right now, but they can see your avatar's new shoes, you know, in the game, for example. And status does drive a lot of our economies. But it's also reaching a tipping point because things like virtual currencies are now getting popular acceptance thanks to the success of your Bitcoins, of your Ethereum type networks. People are getting comfortable with the concept of invisible digital assets having real value. So when you sort of combine those sort of social trends with the economic evidence that people are seeing in cryptocurrency spaces, you can see how exciting virtual economies can be. And what's particularly interesting from a sort of futuristic perspective in investing in building virtual parallel economies is that they allow us to sort of get through sort of the escape velocity of growth, which is becoming a problem. So we've kind of got these sort of donut economics, degrowth models that are being sort of pushed by the World Economic Forum and everyone else trying to say, you know, stop growing, it's too much, like live within your bounds. And that's not a very exciting sort of proposition to get investors or young people excited about. But if we are able to build parallel virtual economies, virtual digital goods, they don't require destruction. I mean, of course, fast fashion causes massive ecological destruction. No one needs that many pairs of cheap jeans, but you can still buy and feed into that senseless consumerism need that so many of us have in our overdeveloped, boring sort of middle-class lives to sell people digital goods, which only sort of damages your own psyche. It doesn't damage the planet, which is an interesting concept for sort of a perhaps a way to have more sustainable growth without sort of worrying or contending with the real things that I spoke about. So I do like to sort of think about those contrasts there. So entirely virtual digital goods and services, or else very, very physical.
Right. I mean, it does seem like when everyone's focused on one area, say what's going on with tech, you're maybe overlooking opportunities in infrastructure or kind of these physical real world areas that are now not getting as much attention.
Well, it's massive. I mean, if you just look at the growth of the very big gaming platforms, we see them in our agency as being the next social networks. We don't think social networks are going to be text-based at all. Social networks are going to be more sort of intuitive. It makes a lot more sense. It's more fun to sort of socialize and have conversations in a more holistic, more natural environment compared to just sort of, you know, commenting on people's tweets. And future generations will find those things more and more natural. But there really is just so much going on there. I mean, anyone from interior designers to architects to brands are already participating in these spaces. And we know that they have been kind of tried before in the past, but I don't think people were ready for it yet. Only gamers and children were sort of interested in actually, you know, spending their pocket money on these things. And so what's changed is people are understanding that digital assets can be collectibles, could actually be alternative stores of value. And in some ways, for people that are new to sort of virtual economies and investing, it's more tangible to invest in a tradable piece of digital art than it is to invest in a Bitcoin, right? Because a piece of digital art with like a unique timestamp on, at least you can look at it, even if it's not something you can touch and hold. It already sort of feels that little bit more tangible to us. And as sort of virtual spaces become more sort of 3D, as everything starts to feel more real, people are prepared to spend more and more money in these spaces. I mean, like we've all heard the examples of, the $10,000 virtual dress that you can only wear as a filter on your Instagram feed. People are actually spending money on this now. So I think there's opportunities to watch who are going to be the companies that are going to own that space, or as we say, who's going to own the sort of the substrate, who's going to have the substrate monopoly on the 3D virtual space. So if you've got sort of like Amazon that's got the monopoly over actual selling of goods, and you've got sort of your Facebooks and Twitters that have the monopoly over trading of time, who's going to have that monopoly over the substrate, the platform in the virtual metaverse sort of economy?
Yeah, and it'll be an interesting trend to play out. And I think that will also depend on user adoption, and people kind of need to get comfortable with that idea the same way they did with digital currencies or even buying goods online in the first place. I mean, you go back in time to like the 90s and people would be like, oh, you shouldn't give your credit card number online. And now, you've got the one-click option just to buy things. So, how we kind of adapt and how we just kind of look at these things, like it does shift over time, and that is sort of a process, and there will reach that tipping point where people, just kind of start to overwhelmingly push into it. I want to get into some reader kind of comments and ideas now. We've got to invest in Beyond Meat, obviously, the big meat alternative play. I think long term that's probably pretty good, but I mean it's a pretty volatile name, and people's views on kind of the plant-based meats I think has shifted kind of up and down a fair amount since the company's gone public. But, with news of some places looking at doing insect protein as kind of another area, it certainly seems like there's still a lot of room in this space.
There probably is. From my perspective, I think the more exciting ones are actually the lab-grown meats, the ones that actually give you the real protein just without the sort of cruelty. So the someone that actually gives you meat without the sort of the ethical questions that come with it. I think they're probably more exciting from a tech perspective and from a long-run sort of satisfaction perspective, because as soon as you start starting to think about sort of plant-based fake meats, you kind of get into the questions of what else is going in there, how good all those processed sort of goods for you, because consumers really are becoming more and more concerned about those sort of over-processed things. And that's kind of a halfway gap between vegetarianism and meat eaters. So it's not quite like solving anyone's problem, because a true vegetarian doesn't want to eat a fake burger, because they don't even want to associate themselves with meat, like the really hardcore sort of market leaders in that space. And at the same time, if you are a meat eater and there are alternatives that give you something closer to the real thing, that's probably the direction we're going. And I wouldn't be surprised if Beyond Meat itself doesn't start looking in those directions too. They also have to get their price points right, because if you wanted to make a mass consumer good, I don't know how long you'll be able to sort of play the luxury fake food card for. But I would be looking at those sorts of companies, but perhaps look at what's going on in Israel with the lab-grown things. I mean, they've advertised you can like eat Lady Gaga, for example. They use starter cells from people's actual skin to grow your own food, which is quite interesting. So look at the more high-tech solutions.
Yeah, I mean, there's just so many interesting ideas that are still just being explored. We don't know what the dead ends are yet. Kind of what.
Look at the category, not the brand. Yeah.
Yeah, it's pretty interesting. Another comment we have is vertical farming. Obviously, I know that kind of plays into hydroponics. You're using less water. You can also just incredibly increase your crop yields per acre.
Yeah, absolutely. I think quite interesting to look at who to bet on in that space. What we've definitely noticed, and we've seen so many pivots in this regard, is in your very big white goods manufacturers turning to that side of urban farming. So like your Panasonics, for example, those very big companies that have deep pockets. These are not cheap things to set up. They're not efficient at a hobbyist level or on a sort of subsistence, small scale farming level. We've got some projects here in South Africa. We've seen them. It's not going to make anyone rich investing in those sorts of things. Your import-output costs are just not as exciting as they might be. They're efficient from a water perspective and from a sort of sustainability perspective, but not necessarily that profitable unless you're looking at huge scale. But look at the technology behind it. Who's making the fridges? Who's making the actual machinery? Who's doing that? I think that there are definite opportunities there, and particularly in your higher density urban areas. I'm not sure how necessary that is in a place like America, where you've still got quite a lot of arable land going on, but definitely in your sort of Asian companies that are looking at that sort of thing, and your European companies, definitely worth looking at. I know there's some interesting projects in London that are showing some promise.
I mean, it's definitely an area where there's room for improvement. We'll be able to kind of see what shakes out. So final thoughts, any other kind of big trends that you're looking at that you think people can kind of drill down to find great investment opportunities for the next 5-10 years?
Yeah, so we spoke a little bit about sort of the biotech from a longevity perspective. I think there's also going to be an explosion, whether we like it or not, of like biohacking and genetic editing of future humans. I mean, when you're starting to get companies or countries like France giving the go-ahead to actually engineer super soldiers, we've got to take that as a sign that this technology is going to happen, whether we like it or not from a moral perspective. And I think there's going to be a lot of consumer demand, because who doesn't want to be healthier or smarter or any of the rest? And who doesn't want their children to be healthier or smarter or any of the rest? So I do think that the biotech space has got sort of, future looking for you, sort of your preventing aging side of things, your immortality kind of side of things, but also looking to the other end to what's happening with children and babies and what's going to happen in that space and the future of humanity there. So I think that's quite interesting to watch out for.
All right. Well, I'd like to thank you for joining us today, sharing your thoughts on some of these big trends and some of the investment opportunities that are going to be playing out over the next 5-10 years, and a lot of those geopolitical landmines along the way. I think there's going to be a tough couple of years in some ways, but if you're in the right areas and investing in some of these trends, you're gonna come out ahead, even if some crazy things happen kind of on that front. So
I would totally agree. It's crazy, and it's definitely going to get only more crazy. As crazy as the virtual financial sector is, the opportunities and the demand are going to be focused more and more on solving real needs that don't go away no matter what's happening in the marketplace. So I think that would be my midterm view over the next few years, maybe if not the next few months, because I think we're still in the middle of a total crazy season.
Right.
But yeah, if you focus on the real, I don't think you can go far wrong.
Absolutely. And where can people find more on your thoughts, your writings?
Well, my company is FlexTrends, so we flextrends.com, and we do trend analysis there. Otherwise, my personal website is bronwynwilliams.com, where I put my more random musings for your amusement. Otherwise, find me on Twitter at Bronwyn Williams. Very easy to find.
All right, Bronwyn Williams, thank you for joining us today. Appreciate your time.
Thank you.
And thanks to everyone else for taking time away to watch GameStop share prices move crazily once again. Until next time, Andrew Packer for Wall Street Reporter signing off.